Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
It was the bombshell news over the weekend. Even my husband talked to me about it, and that is Warren Buffett leaving the CEO head at Berkshire Hathaway. Matthew Palazola is Bloomberg Intelligence Senior Analyst for P&C Insurance. He was there on the ground. Matthew, what was it like when he said that in the last few minutes of his address?
So I was there, boots on the ground. So I have to admit, so it's cold in there. It's dark. People are up since 4 o'clock in the morning.
You're really selling it right now.
Yeah. Oh, the guy in front of me is slumped over asleep in his chair. And I looked at my watch and I said, "Oh, there's only 5 minutes left." And I said, "It's kind of not that eventful of a meeting." I literally said 5 minutes left. And then Buffett looks up and he says, "Oh, I just got an alert. There's 5 minutes left. I have to say something before the meeting ends." And once he said that, I think everyone in the building knew what was coming. I was personally really sad. Like I was almost choked up. It was a sad moment. He talked about it. He got a big standing ovation. It was, you could definitely feel the emotion in the building.
What do we know about Greg Abel? He's been kind of the successor to Mr. Buffett. He's been kind of running things really for a number of years now, right? Yeah,
and I mean, a couple of things on Greg. So, number one, he's been with Berkshire since the early 90s. Okay. So he's been around for a long time. He was vice chairman 2018. We've talked about over the years how Buffett has talked about at these meetings that he's been ceding a lot of responsibilities and control to Greg, and how he's been working on, kind of these bigger deals to go over time.
What do we think the premium is going to be worth now? No one can replicate Warren Buffett, period. Mm-hmm. The structure could still be there to run a very successful behemoth, right? But it's not going to be the same.
Yeah,
Alex, what's the premium there, do you think?
Certainly some of the magic is gone, right? And the Buffett premium. I would argue that, you see the stock's down. I think it was 6% when I left my desk. It kind of makes sense to me. You probably had people with large unrealized gain positions in it, and they're like, kind of, Buffett's out, now I'm out. Similar to why Berkshire itself sold their positions in Apple, Bank of America. But I would look forward to the future and say, maybe you're not getting these kind of home run deals, but maybe you're getting better capital allocation. Maybe you're getting a dividend. So, maybe those things offset each other to some degree.
That's where we got to go. What's it?
350 billion.
350 billion amongst friends. Mm-hmm. Got to put up a significant dividend yield, and you got to stop buying back some stock.
Yeah, I mean, so
why can't that happen today?
I don't think it's happening today. I don't think it's going to happen this year, right? I think when Greg takes over, I think he will be very cognizant of making dramatic changes. But I also feel like Berkshire got away with a lot, because Buffett, right? Yep. So that will not hold water anymore. And I think it would behoove Abel to really do something with the capital, and the investor questions would carry more weight.
How is the company doing?
Fine. The first quarter, okay. I didn't love the first quarter results.
Fine is not a great. I don't love the word fine.
I mean, $10 billion a quarter is good, mm-hmm. right? That's the kind of earnings power. There were just a couple of signals in the first quarter results that I didn't love, and I'm an insurance guy. They had adverse development, which means some claims from prior years were costing more than they expected. The wildfire losses were a little bit more than I thought they were going to be. The fire loss that's not a go forward thing, but the reserve issues are a little concerning. But the beauty of the company is such a behemoth, so many streams of differentiated earnings that they kind of offset each other. So their earnings have been better than expected the past couple of quarters. So I thought they were in line for a kind of slight disappointment.
30 seconds. Some of the parts valuation, where are we with this company?
So our Bloomberg Intelligence midpoint, some of the parts analysis comes up to like 1.1 trillion, which was kind of before the meeting the stock was trading slightly above that. I don't know if it's below that now. And I mean, I don't claim to know what Buffett knows, but they haven't been buying back shares for a couple of quarters. So I think he's probably viewing it very much in the same way as fully valued. And the stock's at all-time highs.
I wonder what he does now. Like, if you're Warren, he's 94
I don't know. He's
years
still
old.
chairman, right?
He's still chairman. He's still be chairman
got
for a little
stuff
while.
He's got to do. You're 94. Like,
I know.
I don't know. Relax.
Yes, exactly.
I'd take that at my age.
I would too.
Yeah.
All right, Matthew Palazola, thank you so much. We appreciate that. Matt Palazola, he's a senior analyst who covers all the property and casualty insurance companies for Bloomberg Intelligence. Boots on the ground in Omaha over the weekend. Mr. Buffet, as Tom Keene refers to him, stepping down at the age of 94, and just obviously historic run.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
It is earnings season, folks, and we got the Tyson Foods reporting earnings. I don't know, maybe it's just me. When I think of Tyson Foods, I just think chicken, but they're also in the beef business as well. That's the extent of my knowledge. Stocks trading off today on some earnings. Jen Bartashus joins us. She's a senior retail staples and packaged foods analyst for Bloomberg Intelligence. Jen, the street doesn't like what they heard from Tyson Foods, Springdale, Arkansas. What happened there?
Well, it's really two things, Paul. The first thing is that the beef business did worse than people expected. But secondly, the company held their guidance for the fiscal year, which is generally a good thing, except that they're ahead of pace for the top of their guidance for adjusted operating income for both the chicken and the pork segment. So there were a lot of questions on why, given the strong first half performance they've had, that they didn't actually raise their guidance overall. And so between those two things, that's what's putting pressure on the stock today.
Do we get the sense that that's a demand concern, or is it an input concern?
Well, on the beef side, it's an input concern. And actually, there's a piece to that puzzle that Tyson touched on, but they didn't really go into detail. And that's that they talk about how consumers have really still had a lot of demand for beef, which is true, except that when you look at the consumer, they're trading down into like ground beef. Now, when you have a shortage of cows, the problem that Tyson has is that they have to put higher quality parts of the animal into grind in order to sell it, which means that their profit per animal is coming down. And that's a concern over the long term if those changes in behavior patterns don't alter in the near future.
All right. During our little egg shortage, my scientific analysis was basically just make more chickens. Tyson's are the chicken people, I think. What are they saying about the chicken population these days and eggs and all that kind of stuff? Because they're the folks that know.
Yeah, so the chicken supply is actually pretty healthy. From a standpoint of the chickens that are used for consumption, they really weren't impacted all that much by avian influenza. And so that was the good news. The bad news is that the mortality rates on the type of chicken that they're currently using is still pretty high. So that means that they're not getting as many chickens into the processing plants that they normally would given the number of eggs that are being laid. And so that is an inherent top or cap to supply. So supply is robust. It's going to grow about 1% this year. But there are some constraints there with how much more they could actually grow supply overall.
What's the tariff impact, if any, on Tyson, on both sides, the demand and supply?
For Tyson, actually, they have very limited exposure for tariffs.
That's good.
They said on their call today about 95% of their revenue comes from product that's sold in the United States. Their export is relatively small, and they've had some time to work on contingency plans. So finding different end markets that they can send some of the parts of animals that U.S. consumers just don't eat. So right now, it doesn't appear to be a very large risk for Tyson at all.
You mentioned maybe some issue with the cow herd. I mean, I watched Yosemite. I know all about the ranching business.
I see how this goes.
Yeah. So, I mean, can't we make more cows? What's going on there?
Well, we can make more cows. The problem is that for ranchers, it's a tough environment to decide to actually build up herds. Interest rates are still relatively high. There's still high cost to expand operations. We've had drought that's only just reversing in a lot of the key areas where we raise cattle. And so that decision is has been coming. But the problem is that once you even start, it takes 18 months to get a cattle from birth to market. So even if they start today, we're not going to see an influx of supply for quite some time.
I feel like just a few years ago, it was all about alternative protein. I remember particularly with Cargill, for example, they're making a really big push into that. Has that trend for these guys shifted now?
It has. When we look at the consumer consumption data, the luster around plant-based has really fallen off. And so, right now, there's a core demographic that will always be interested in that product. But at the moment, it's not growing. The sales are continuing to contract. Part of that is that the cost of regular meat has come down, and we had food inflation, which pushed the cost of special ingredients for alternative meat way up. So the price gap between alternative proteins and conventional proteins got a lot wider in the last couple of years, and it still hasn't completely collapsed again. And so until that gets a little bit closer, it's going to be harder to get consumers to get interested again in alternative proteins.
So what is it, the Tysons of the world, what are they saying about their consumer these days?
So, they're talking about the demand for protein. And this is something where at the Bloomberg Intelligence Farm Food Fuel Conference, we had a whole suite of panelists on protein. And the demand for protein is really strong, whether you're talking about animal protein, whether you're talking about dairy. Current diet trends are high protein based. And so that really bodes well for producers like Tyson, as the consumer is willing to still spend on protein. And it's in the majority of their purchases when they're going to the grocery store.
So true. I'm a big protein person.
Well, who isn't? Who doesn't eat?
I know, but to actively search for protein, that feels different, doesn't it? Maybe
just eat chicken, eat it.
All right, fair enough.
Burgers on the grill last night. Killed it.
Oh, yeah, burgers. But then you got cholesterol issues. Okay, anyway, Jen, thanks a lot. Jennifer Bartashus, she joins us from Bloomberg Intelligence Senior Analyst, Retail Staples and Packaged Food.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. On the trade front, President Trump suggests that some trade deals may come as soon as this week. How about that? Enda Curran, Global Economy Reporter for Bloomberg News. He joins us. He's down there in D.C. And how do you think this thing is going to play out here? Is it country by country by country by country that we're going to have to wait for trade deals to be announced?
Well, it's something of a tease from President Trump. We're about a month now, since just over a month since Liberation Day, and the president was making the point that there may or may not be some agreements coming this week. And he wasn't being specific. He was quite vague, and he was being asked by reporters about this. But what we do know from administration officials is that talks are ongoing with several countries. They have identified at different times. Japan is near the top of that list. India could be near the top of that list. South Korea could be near the top of that list. So there could be some kind of agreement reached with one of those at some point soon. Now, the question then becomes the details of that agreement. Mm-hmm. That's where everybody will be parsing this. What sort of moves had to be made on non-tariff barriers to satisfy Washington, for example? What kind of concessions had to be made on maybe investment into the U.S.? Where will the actual U.S. tariffs settle? All of those will obviously offer nuggets for sure, but it also may offer a roadmap for other economies to say, hang on a sec, we can do that too, and come to the table to the US to try and work it out. So we don't have specifics yet. It's a little bit vague, but clearly something's coming down the pipes at some point soon.
But I understand that the agreement versus like an MOU versus a deal, they all mean different things. But do we think anything that's on paper at this point, even if it's a memo of understanding, would that count as getting something done and tick that box?
And as the role of Congress and all of this, so skeptics say, look, negotiating a real meaningful trade deal takes months, if not years, of protracted trade talks. Okay, so clearly that can't be done in weeks. Nonetheless, I think what people are looking out for is, first of all, what is actually agreed, but most importantly, where will U.S. tariff rates settle in the near term? So remember all of those, what were described as reciprocal tariffs, remember those levels that were set pretty high for many trading partners right around the world. If the tariff level is maybe back towards this 10% baseline level, then that might suggest that that's where things might settle if you cut deals with the US. cut deals with the US and you settle for that baseline 10%, that's the way forward. But of course, if it's not and that tariff level is higher, that's what I think a lot of people are going to be keeping an eye out for.
Who's driving the bus here? Is it the president? Is it his trade advisors? Who's kind of, because there's a lot of balls in the air when you think about all the countries that are presumably in negotiations with the U.S.
Yeah, I think there must be at least a dozen or so in serious negotiations. And then, of course, they say they're talking to up to 70, I think it is, odd governments altogether. It seems to be different personalities playing different roles. Treasury Secretary Scott Bessent is clearly front and center for the Asia trade talks. He's kind of made that clear. The trade representative, Greer, obviously is kind of the technical guy behind the scenes. He would be involved in all of this. And of course, Commerce Secretary Howard Lutnick, he seems to be more vocal maybe on the European side, but they're all playing their role. They're all part of it. But ultimately, as all the officials say, and as we can say to the outside looking in, ultimately President Trump will make that agreement. He will decide whatever will be decided. The market rally in recent weeks will, of course, give the administration a lot of confidence that what they're trying to do is the right thing. But at the same time, we all know that they got pretty nervous, a couple of weeks ago when they did pull back and put that pause on reciprocal tariff. So a lot of focus on what level of tariff will be agreed in the near term and what the roadmap will be from there on for all the countries involved in this.
All right, and super appreciate. Thank you so much, Enda Curran, Bloomberg Global Economy Reporter, joining us on those trade deals that may come as soon as this week.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix Steele, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube. Michael McKee joins us here. Mike, what do you think about some of the economic data? We got the ISM services came out, better than expected, but boy, the prices paid number kind of jumped out at you. How do you take that all in?
Well, I think you're seeing the beginning. I'd rather hear more about John Tucker.
Tucker's back in the day.
I think what you're seeing is the beginnings of the impacts of the tariffs. This is soft data, essentially, but it has sort of a hard component to it in that the ISM is asking what's happening in your business this month. And if you go under the hood, you see that imports have dropped a lot and prices paid went up a lot. And those two things are probably going to be connected. Also, inventories went up because people front-loaded ordering. The interesting thing about it, though, was that new orders were still rising. Yeah. So it may be that the businesses are retrenching, but the customers have not yet. Or it may be that the customers are looking to those who import to keep them going, which they may or may not be able to do.
Yeah, 11 industries reported growth last month, led by accommodation and food services. Only 6 industries contracted. When do you think we're going to get a clean read on all these numbers?
Well, it's going to probably be over a period of time, depending on the number and how businesses react to a specific data point. I would imagine that you're not going to get a full picture of it until either July or August, when we know what the tariffs are. Remember, the reciprocal tariffs are postponed until July, so that could hang out there for a long time. When we know what the tariffs are, that will help. And when we see how people react to it, both other countries, whether they're reciprocal tariffs or whether they come to some kind of a deal. So at this point, it's really hard to say when you'll know, but I suspect it's going to be one of those things that slowly becomes obvious.
How about to the Federal Reserve? Are they going to be slow to kind of recognize what may be happening out there in terms of inflation and growth?
Unless we get some sort of rapid movement in either one of those things, which nobody's really predicting at the moment, they're going to be slow because there's no benefit to them to moving quickly. If the economy is slowing down, then the question becomes how slow? And with inflation still above target, et cetera, then the Fed doesn't want to get into a situation where it's boosting inflation by cutting rates too quickly. So they'll just wait and see. And the economy's in pretty good shape right now. It appears, with the numbers still doing okay and inflation still slowly coming down. So no problem for them.
That's one of the arguments too for the OPEC plus production increase, right? It's like, hey, listen, the hard data is actually okay. Like maybe there are lots of reasons why they decided to do it, but maybe the market can actually absorb it because we haven't seen demand necessarily fall off a cliff.
Well, it sets up an interesting question about how consumers will react if gasoline prices start going down, and then how the Fed reacts to that if in headline inflation goes down because gasoline prices and energy prices go down. And I suspect they will try to look through that as much as possible because they know that could easily change.
Totally.
And because the real issue is going to be is the economy slowing down. If the economy is slowing down, that's going to put a drag on inflation. It's also going to mean that money that you would have spent somewhere else because you're not spending it on gas, you may not be spending it anyway because you're trying to cut back and save money.
We were paying attention here to a lot of the speakers out at the Milken conference today, and a lot of the, whether it's Bill Ackman, Paul Taubman, Mr. Rowan from Apollo, all saying, there's uncertainty out there, and there's some issues out there as it relates to their businesses. Yet, Secretary Bessent calls the U.S., quote, the premier destination for global capital. So I guess that's the argument of near-term pain, maybe long-term gain from the administration.
Well, it is still.
Sure.
We have the largest, deepest capital markets, especially on the Treasury side, on the bond side. So there are not a lot of alternatives if you want to move a lot of money around. But most of what Scott Bessent was saying today was a sales pitch to, highlight the administration's economic agenda. The one bit of news I thought, to the extent it's news, was his description of how he would see the 10-year yield dropping because he's made a big deal out of that being sort of the benchmark rate for business activity. And his argument was you lower the budget deficit because then takes some of the credit risk out of the bond market and rates can drop if you take out the risk premiums.
And he was talking about 1 percentage point per year ideally would be, as the deficit to, or the debt to GDP would be meaningful.
No, but the obviously one, if you follow the budget process, has to laugh because the budget that they are working on this year, through reconciliation, raises the budget deficit. And that's even beyond just the machinations they're doing to avoid the reconciliation rules. They want to spend more money. And every day Donald Trump is talking about spending more money. Let's rebuild Alcatraz, kind of thing. So we're not going to get that 1% per year deficit decline, I don't think. And so it kind of makes his argument not relevant at this point.
And you're headed off to D.C. tonight or tomorrow? When are you going? Tomorrow. The Fed meeting. Any firework?
None.
Just one. I was like firework. I didn't say works. I said firework.
It's not even one firework, I don't think. We will get no move on rates. The Fed will be very circumspect about what it says in its statement because they can tell us what's been happening, which is okay, but they have to emphasize we don't know what's going to happen going forward. And then there's no new economic forecast. There's no new dot plot. There is only Jay Powell. And I suspect we get a lot of questions that are answered by, I don't know.
Fair enough. That's a lot of the questions that we also ask and answer too. All right, Mike, thanks a lot. Mike McKee, Bloomberg International Economics and Policy Correspondent.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.